What is up, YouTube? It's good to be back. The best time to plant a tree was 20 years ago. The second best time is now. Investing is like planting the seed that will ultimately grow to be the mighty oak tree. It's the key that unlocks the doors to financial freedom and prosperity. If you think you need thousands of dollars to start investing, think again. Most people think that investing is for the wealthy, but the truth is, anyone can start investing. And with as little as $100, you can take your first step towards a life of economic independence and the life you deserve. Now, I know that starting out with $100 may not seem like a lot of money, but by getting started today, you can leverage that $100 bill and have it earn you more money as the days go by. Sort of like compound interest. In this video, we'll cover the benefits, the different investment options, and hopefully by the end of this video, you'll have all the information needed to start investing. What are the benefits of investing? Investing is like a snowball rolling down a hill. As it rolls, it continues to gather more snow, gaining more momentum, getting bigger and bigger, until ultimately it provides you with a big bag of money or a bigger bag of money. Not investing your money is basically like leaving money on the table. It's like trying to build a sandcastle with your bare hands while everyone at the beach around you is using tools like shovels and buckets. Basically, what I'm trying to say is that you need to take advantage of all the different resources that are available to you. Now that we understand why we should invest, it's also important that we understand the different types of investment options that are available to us. But for this video, since we only have $100, we'll cover those that make the most sense for our budget. These will be individual stocks and low-cost ETFs. Stocks are the lifeblood of the market. These investments represent a share of ownership in a company. Basically, when you purchase a share of a company stock, you're basically buying a small piece of the company, and as a result, you are entitled to a portion of that company's assets and earnings. Stock prices are usually very volatile, meaning they tend to move up and down, just like a roller coaster. Now, picking individual stocks can be great because they can provide you with a large return on your investment. But the drawbacks is that they also come with greater risks. The quote, "with great risk comes great rewards," fits perfectly for this type of investment option. And investors who love to take on risks and don't mind the unpredictable and exciting nature of stocks will usually take on this risk for the potential of higher returns, sort of like me. Stocks are generally very popular, but for the budget, some shares of stock we're interested in can be very expensive, especially for shares of stocks in companies like Tesla, Microsoft, and Amazon. Fortunately for us, there are ways to invest in these high-priced stocks without having to pay the full share price. And this is where fractional shares come in. Fractional shares allow investors to buy a portion of a company's stock instead of having to pay the full share price. For example, instead of buying a whole share of Tesla at, say, $200, you could buy a fraction of a share at a much lower price. Now that fractional shares are becoming more and more popular, many brokerage firms are now starting to offer them. Some of these brokerage firms are Fidelity, E-Trade, and TD Ameritrade. While fractional shares are a great way to invest in stocks that once seemed so out of reach, just like individual stocks, they do require some knowledge and research before pulling the trigger. But if you're looking for a more simplified way to invest and are more risk averse, you should consider low-cost investment options like exchange-traded funds. These are also known as ETFs. They're very popular investment options that trade exactly like a stock does. But the difference is that ETFs allow you to diversify a portfolio at a low cost, meaning that unlike stocks, you can invest in a wide range of assets or companies. Now, the reason you are considered to be more diversified is because instead of having all your eggs in one basket, you now have multiple eggs or companies in this scenario in one basket. Now, the way ETFs work is by tracking a specific index like the S&P 500. And an index is basically a way to measure the performance of a group of things. For this example, we'll say stocks of a bunch of different companies. Now, what the S&P 500 index represents is the largest 500 traded companies in the US. These include companies like Apple, Google, Tesla, McDonald's, Nike, Netflix, and so on. This is great because you can invest in a broad range of companies without having to purchase each stock separately. Now, since we only have $100 and the S&P 500 is currently trading well above $100, here are a few examples of ETFs trading under $100 that you can take a look at. Ticker symbol IYC. This ETF exposes you to companies like Amazon and Walt Disney. IYW, this ETF gives you exposure to US technology companies like Facebook and Apple. And finally, if you want to expose yourself to large mid-cap stocks in developed countries outside of the United States, then ETF IEFA or IFA would be a good choice. And some of their holdings are Toyota, Nestle, the food and beverage company, and Samsung, the South Korean electronics company. Now, if you're looking for a really low risk option, you can also invest in a high yield savings account. Let's face it, most people are tired of low interest saving accounts. Chances are you want to earn more money while still keeping your money safe. And that's why high yield saving accounts are more attractive than regular savings account. You get both safety and growth. They're FDIC insured up to $250,000, meaning if your bank fails somehow, which always tends to happen, you'll be able to get your money back. So why settle for a regular savings account when you can invest in a high yield savings account? Chances are, at this moment right now, you might be in luck because high yield savings accounts could be offering a higher interest rate due to our current economic conditions. The Federal Reserve has currently been raising interest rates, and when the Feds, also known as the Federal Reserve, raises rates, banks tend to increase the rates they offer on their savings accounts, allowing you to get a better return. Now, while investing in stocks, exchange traded funds, and high yield savings accounts is a great way to get started with investing, to truly succeed in finance and just investing in general, whether it's stocks or any other asset class, it's more important to invest in yourself and your financial education. One way to do this is by reading books on personal finance and investing. Books are great because you can gain insights and ideas from people more experienced than you at a very affordable cost. Now, a book I really like that is also considered to be an entry-level book is The Millionaire Next Door. And this is the book right here. It's The Millionaire Next Door, written by Thomas J. Stanley. It is written in a clear and concise way so that beginners can easily digest it. It covers many topics from personal finance to investing in low-cost index funds. One of the biggest takeaways for me was that by consistently saving and investing your money in low-cost ETFs, coupled with a well-thought-out plan and a willingness to put into work, anyone can become wealthy. In conclusion, guys, it's extremely important that you invest in yourself. It is the foundation to achieving success in any goal, and by starting with as little as $100 or simply just picking up a book, you can start moving towards your desired destination. Anyways, thanks for watching. Good luck. I wish you the best. Hit that subscribe button for me, and I'll see you guys on the next episode.